The big successful consumer stocks are what I would buy first, Mel, before I even buy banks. I think banks, I've been one of the folks that's missed out on the bank run, sadly. I think they've done phenomenally, and they're going to do well into next year. But the first thing I would buy, I would be buying still Home Depot. I would be buying Target. But I'm not buying them now because of what I talked about yesterday. This was their Super Bowl, Mel. Into Black Friday is their Super Bowl. I buy them in mid to late January, these stocks that I'm talking about, because I think they get the lift then. They probably have a lot of sideways action and people basically rebalancing their portfolios after these furious runs.
Okay. Oh, but I wanted to clarify to you. This is a favorite relative, not one that you dislike.
Not Steve
So
Weiss.
what would you tell this favorite relative to buy, Joe?
So I would tell them growth plus financials. That's where my focus would be.
And what would growth
growth is
encompass?
The obvious places. That's technology. Growth is healthcare. Growth is in retail, the Lululemon names. But it's also financials. And I think financials have been able to endure. They experienced a rally on the back up in yields towards 2%. Well, 10-year has fallen right back to 175 again, but yet financials are trading at all-time highs. So they're able to endure that. If we're able to get a modest lift in net interest margins go in the favor of financial institutions, that's one of the reasons why I want to continue to hold them. So I like the growth strategy is not going away in a 2% world anytime quickly. But I also want to throw in some financials there as well. And notice I didn't mention energy.
Yeah.
No.
That's where I was going to go.
For a least favorite relative, I guess.
No, I disagree.
Jenny.
So I was thinking, if asked this question about this time last year, I think I'd give the same answer again, which was my thesis last year was that we didn't need that FANG kind of cohort to lead the market higher. And I remember saying at some point, what if the other 490 stocks in the S&P actually performed okay? We could have a really good year this year. I think that could be true again next year. And so thinking about what's underperformed, where there are actually really great quality companies, I agree with you, Joe, financials. I think there are really terrific plays in energy. I think you could look to small caps and look at things where their earnings are growing, they have missed out, valuations are still pretty cheap. That's what I'd tell people to do.
All right, the original Uncle Steve, what do you say?
Are we related?
What do you tell yourself?
Well, I'll tell you what I just bought. I just bought Trip.com, the old C-Trip.
Okay.
I added to BABA. I don't, my thesis on BABA has played out pretty well for a change, and I don't think it's just a one and done. In other words, there's so much government pressure on these companies to have a secondary listing. If they could, they'd like to bring them all back to China, to the A-shares market, not just Hong Kong, but of course they're too big. However, there are a number of companies, of which I own some and have owned some, that have gone private and relisted there, and some big ones. Chio 360 was a big one a few years ago, went private $9 billion, relisted at $50 billion, and traded to $134 billion in the first day. So to me, the pressure is going to continue. They changed the rules for the dual listing in Hong Kong to allow founders to maintain their dual class stocks. So I think you could expect to see JD.com. I think expect to see Trip.com, obviously, Tencent also have a dual listing there. That's going to continue to bring up BABA. You don't have to own all of them because it'll lift all the ships the next one that does it.
Just real quick, I also think it's incredibly important that Apple and Microsoft continue to have the type of appreciation that they're having now. Apple's not going to go up 66% in 2020.
Unless their earnings go down to 10%.
Hey, you know what, John? That's a great observation. Absolutely it could, but logically, you would say to yourself, wow, another 66%. We're talking about almost a $2 trillion company at some point.